Hello and welcome to the Friday interest rate update. Well, interest rates essentially flatline this week, which is always welcome. We don't like to see this volatile up and down. So I guess Wall Street is feeling pretty comfortable right now with the economic data. Today is Good Friday and the markets are closed. So there was no movement today at all. So we'll find out what happens on Monday. Personal consumption expenditure, PCE, which is the Fed's favorite indicator of inflation, came out today while the markets were closed. So while we did not make much progress on lowering the inflation rate, at least it was slightly better than expected. So on Monday, hopefully we'll get a little bit of a better rate going down. So the core PCE, which is what the Fed watches so closely, it strips out the volatile food and energy prices, came in at 2.8%, which was pretty much in line with expectations. The Fed target for inflation is 2%, and I don't see anything that's going to allow us to make a quick drop to that level anytime soon. It's going to be hard to get there based on how they calculate inflation. So the next Fed meeting to discuss the Fed funds rate is May 1st. It is almost certain that the Fed will hold the Fed funds rate steady at that meeting. I would also be surprised if they make a cut at the June meeting as well. I predicted that they would in June. It appears it will be a very slow decline in rates from here. One thing that could change that is the jobs market. We get jobs numbers next week. So if the Fed starts to see cracks in the jobs market, that could spur them to make a cut sooner because they don't want the economy to fall into a bad situation. So the economy continues to show resiliency right now. Consumer spending is still driving the economy. However, it is clear the consumer is spending more than they are making, with credit debt continuing to grow to all-time highs. It appears many consumers are living on their credit cards. So how long will this last? At some point, consumers are going to have to pay their bills and pay their credit cards off, which will slow down the economy. When will that happen? It could take a period of time. We don't know. So some good news for the real estate market is that despite the high interest rates in February, where the rates were over 7% most of the month, pending home sales still increased by 1.6%. In Nevada, particularly, inventory is still over 17% below the levels last year, which continues to hold up prices. Nevada leads the nation in this category. There is still more demand from home buyers than homes available for sale. So next week, I'll go through why there will be no crash. We hear it's a crash, it's coming, I'm waiting. So there are still people sitting on the sidelines waiting for home values to go down. I'm sure it is super, super frustrating for home buyers due to the unaffordability of homes. Mortgage payments are high, down payments are high. Unfortunately, I don't see anything in the data that's going to change this dynamic anytime soon. Those that can qualify while outside of their budget or comfort zone may have to sacrifice now to get into the game, to get a home at a lower value, and eventually reduce their mortgage payment down the road through a refinance. So as always, if your buyer or seller wants to run through some numbers, what if scenarios, I'd love to jump on a Zoom call to help them out. I love doing this stuff and sharing my experience and wisdom so they can make an informed decision. So until next week, happy Easter and enjoy the weekend. We'll see you next week on the Friday interest rate update. Bye-bye.